can see my screen. So this seminar is it basically builds on any previous seminars that we've had, but it's also standalone. I try to give as much detail as I can. So these are speakers. We just want to give a little bit of an overview of what I'm going to talk about. I'm going to talk a little bit about why you would need to, or why it's a good idea to switch into an accounting system from how you're doing things right now. Walk you through a little bit through the selection process and give you some points to consider. Then we'll talk specifically about QuickBooks as one of the solutions, QuickBooks Online. And then Hardy is going to talk to you how he uses the reports that an accounting system spits out for his analysis and review. So there are definite benefits of keeping better track of your financials. I'm sure you're using something right now. Otherwise, you wouldn't be able to run a business necessarily, right? Because you need to know when you need to buy something or when you need to sell something or what the price would be. So surely you have some way of keeping track. But there are benefits to making it more formal and bringing it into an accounting system. And with that, you'll have an improved ability to plan and budget. So now that you have everything in one place, you can see where you're coming from, how things were in the past, and how you want it to go into the future, because it's easier to build on what you know rather than think about something abstractly. You can analyze your margins, and margins can be literally like on a product level, on a cut level, on a species level, on a just business level. You know, this is my income, these are my costs, these are my expenses, and you can see how the ratio between these three things changes from period to period. You can see your trends and successes and pitfalls, and this is really great. You could see if anything is more seasonal or less seasonal, than you expect. You can see whether some change, whether you hired more people or fired people, or if you made changes operationally, if it has a direct impact on your sales, for instance, or increases your costs. You can apply for grants and loans quicker because typically those ask for financial records. So if you're keeping track regularly in the accounting system, you can just run reports and give it to, include it alongside with all your grant paperwork. You keep records quicker and more efficiently. A lot of these systems allow you to upload bank statements into them and other documents, so you can have it as a one-stop shop essentially for all of your financial documentation. And your accountant will thank you because they will be able to see if things are being booked as they should be. They can see things better. They can run reports that makes their life easier, so they're not, running through a bunch of receipts, for example. They have it all in one place, and they just would be so happy if you did that. And then for multi-entity enterprises, there are some additional benefits. So just so that we're clear on the terminology, what I'm calling a multi-entity enterprise is if you have more than one type of business. So if you have a ranch and a meat business, so they could be part of the same legal entity, but from the perspective of how we're tracking performance, they're multi-entity. Or you can have them as two separate businesses, with their own EIN number, with their own bank account, with their own everything. So whether or not, however way you're tracking both sides of these very different businesses, an accounting system will be able to help you. So you could, if you're keeping them separate, and we do recommend it, and we'll talk about it a little bit later, but if you have them separate, you could see how the product flows from one place to another. You can, if you're keeping them in the same, that's also visible in there. It's just a different way of how you're recording it. And it will, having two sets of books also helps you plan and budget and analyze and book things in a more customized ways on an entity level. But whichever way you're doing it, having an accounting system will help you streamline, organize, and make things tell a story. Because at the end of the day, your financials, they're not just a way to record numbers. They're supposed to tell a story. And the way that you structure them is so that the story is self-evident. So you don't have to dig and say, oh, this isn't what the name is, it's something else. And the accounting system essentially helps you like come up with a binding and make this into a story that is easily seen, read, understood, and analyzed. So with every system, you have to ask yourself questions before you plunge into the system search, and it applies to everything. You have to ask yourself, what's not working with how I'm doing things right now? Because if you have a problem, it is not necessarily solved by going into an accounting system. It may be something above that. Like, for example, I don't have time to keep my records, or I don't have anybody to help me with that. If you switch to an accounting system, that problem doesn't go away. So you have to see what's up right now so that you take that under advisement as you're starting your search. The next thing you have to ask is, what metrics do I have to track? So when I say have, I mean for legal purposes. So your accountant will tell you you need to keep track of expenses and COGS and and income, but there are also maybe some metrics that are required to be tracked, very specifically by somebody who gave you money, your investors or grants or loan, like a line of credits require that you keep books in a certain way, or some other government institution, or FDA has some rules, USDA has some rules, so like everybody that you work with on the government level may have something. Then the next question is, okay, I got that. What metrics do I want to track? Like, what is important to me? Do I want to keep a track of my meat sales by species, and that's all I care about? Or do I want to do it by cut style? Or do I want to do, or do I not care at all? What is it that I want to track? And then how deep do I want to get on my expenses? Do I just want to have general categories, for example, operating costs, marketing, selling expenses, or do I want to get more granular there? Do I need to keep track of inventory? That question is really important because inventory as a feature infinitely complicates any system you work with. And so it actually determines which systems you can and cannot use before you even ask all the other questions. Because if you want to have an inventory processing in place, and so this is literally from assembly and manufacturing and cutting and processing meat, all the way through to how the order gets fulfilled. That's what we call inventory management. If you need that, like if you absolutely need that, then that's actually going to determine what system you end up using like right away. What other financial systems am I using right now? Do they need to flow into my accounting system? So you may be selling something at a point of sale using Square, for example. Square syncs to a bunch of different systems. Do you want to make your life easier by having all of that data just like go into the accounting system for you? So it's just nice to know all the different types of system you're using, so that when you're picking something, you can say, oh, but it works with all of these. So that's an added benefit, because typically the syncing between QuickBooks and all these other systems is free. It's just like setting up a kind of connectivity. A very, very important question is, can I commit to maintaining my financials if I kept them differently than now? So we all are creatures of habits. We love our Google Sheets or our Excel spreadsheets, whether they're super simple and like a one tabber, or a beast, with many different tabs interconnected and sheets interconnected. But we get used to using them. And so the question you should ask yourself, am I committed to switching from that? Or am I going to trip up? I don't have time, like I don't have a headspace right now to think about anything else. You really should switch at a time when you can dedicate, or someone else on your staff can dedicate their time to learning a new system and to actually doing everything in the new system. This is actually a place where a lot of people fail. They just can't get their mind around it, and they end up between the two systems. Essentially, they've abandoned their old one, they've gotten into the new one, but not like full heart, with a full heart, and then they find themselves where like, well, where do I keep track of my records? So this one is very, very important. And then the last one is basically how much money do I have to spend per month? That also, just like an inventory system, determines which one you're going to use rather quickly. So there are different accounting system tiers. I think we're generally in the startup tier right now. This is where you use Excel and Google Sheets. The industry standard is, once you formalize your accounting management, this is where you would be. And then the enterprise resource planning, or an ERP, is typically for companies that are $10 million up in sales. These are the complicated companies that have multi-entities, that have many different sales channels, or very big wholesale contracts. So I put it there just so you know that this is kind of where any business that has massive growth in mind goes. But the enterprise ERP, I'm not going to talk about it at all because it's just not applicable. We're going to talk about the startup and the industry standard tiers. So the startup is Excel and Google Sheets. They're low cost or free. There's no disruption to operations whenever you add something in them or change them, because they're very, very flexible. It's, you can set up a Google Sheet any old way, or an Excel sheet, and they have a fairly shallow learning curve. I mean, there's obviously, Excel has a lot of formulas and things you can dive into, but it's pretty easy to learn, even like if you set it up for someone else, for example, to use it. However, it is labor intensive because now you have to set up a system, even if it's in a sheet. It is very prone to human error. You could be a very, very thorough person and still make mistakes. I have to say that I have all of my complex Excel spreadsheets double checked by someone else because I just don't trust myself. And it's not really scalable. Once you start, if you have one species of to deal with, that's great. 2 species, you're going to get into 5. Excel starts kind of becoming too cumbersome to track. And it may not provide sufficient or reliable data. Reliable could be error prone, or it just could be not very helpful. So the industry standards is QuickBooks, Xero, and FreshBooks. QuickBooks is the industry leader. I think they own like 90% or 75% of it's a pretty high number though, of the market share. Xero is a close contender, and then FreshBooks and anything that has books in it, there's a couple of different versions. They are very, very far distant competitors. But all of them, they eliminate a lot of human errors, because now instead of typing something in, you're essentially selecting from a drop-down list. They allow you to have live sales and cost reporting. They're definitely scalable with your business, and they allow for extensive analysis because there are many different ways that you can run reports on the data. The drawbacks is that they require basic accounting principles when to set them up. So if you have it, you can set it up. You can have your accountant walk you through how to set it up. We do that for some of our clients. But the idea is that you need to know what you're doing so that your assets are in the right place and categorized correctly. Your expenses and costs and income is categorized in accordance with the generally accepted accounting principles. Customization is limited, and when I mean that is, you could do whatever you want, almost whatever you want with a chart of accounts and how you organize all of your income and details, but the system itself doesn't allow much for customization. you can't move links from one place to another. You can't change what says on the button, that kind of stuff. Like now you're in a system and you have to abide by its rules. And the basics of QuickBooks and Xero and FreshBooks have very, very limited inventory management, if any. So that's the drawbacks, but it's still a really, really good next step from using Excel and Google Sheets. So before I kind of talk about QuickBooks, I want to see, Olivia, are there any questions that you think would be worth asking right now, or should I just plow on?
I think we're good. No questions coming in the chat, but I think we can plow forward, and folks feel free to drop them into the chat if you have questions, and if they feel really pertinent, I'll interrupt Miriam and intercept her. But I think we can keep going.
Great. Okay, so what we propose is QuickBooks Online. And the reason why we propose it is because it's the most popular system right now. One advantage of being popular is that there are a lot of people who know you. So if you are looking for a bookkeeper, finding one that uses QuickBooks Online is really, really easy. Another reason why it's great to use a popular solution is that if you're trying to sync anything to QuickBooks, be it your bank, your credit card, or your point of sale system like Square, there are native syncs already in place. And what I call native, just the little terminology, it means that it's a sync from one system to another, and there's nothing in between that helps the sync to happen. Like if I wanted to sync to the Department of to IRS, for example, from my application, I probably would need some sort of a government approved plugin to sit in between. Like I would connect my system to the government plugin, and then the plugin will connect to the IRS. That's not native. That's a plugin connection. But the native would be like I bank with Citibank, for example, to connect to QuickBooks, and there's just a point-to-point connection, and it's really easy and fully supported and maintained. So QuickBooks Online has a lot of connectivity with a lot of different systems and banks and credit cards. QuickBooks Online has an older brother, QuickBooks Desktop. Some of you probably have seen it. QuickBooks Desktop has been around forever. This is how QuickBooks got started. It's a great system. The only drawback to that system really is the main drawback is that it's on your computer. So if your computer crashes or gets stolen or gets damaged, unless you've been backing your QuickBooks Desktop file every day to a cloud somewhere, on a Google Drive or something, there goes your data, essentially. So that's the beauty of QuickBooks Online versus QuickBooks Desktop. It doesn't require any local backup or security. It's fully secured on the cloud, so it just takes that worry out of your everyday life. And to date, I have not heard of any breaches. It's available from anywhere. You just need a working internet connection or a hotspot on your phone to connect. It's great. I have one client who works out of his car, so it's just nice. He has his laptop with him there, and he can just access QuickBooks Online very quickly. Like I said, it seamlessly integrates with a lot of financial ops apps out there. And Intuit is super invested in making the online version their primary version forever. So they're spending a lot of money on adding features, improving it, making it more quicker and more stable. And I think and they're sort of simultaneously trying to kind of move away from the desktop altogether. I mean, desktop is still available and very much working and everything, but I see Intuit being more interested in the QuickBooks Online. So a single QuickBooks Online file can accommodate a multi-entity enterprise. But, as I mentioned, and I will be mentioning it throughout, is that we suggest that you set up a separate QuickBooks Online file for each entity that has its own books, bank accounts, and credit cards. Now, that's actually a very, very important consideration. if you have a multi-entity enterprise, so you do both meat and ranch, but it's the same legal entity and you use a single bank account for both, you actually can't set up two separate QuickBooks Online files because a lot of banks don't allow more than one QuickBooks connection. So QuickBooks can only one QuickBooks file can connect to a bank. So in that case, you're going to use a single QBO file. But if you have separate accounts, even if it's the same legal entity, but if you have separate accounts, bank accounts, credit cards, and everything, in that case, even if it's the same legal entity, you can still set up two different QuickBooks files, and your accountant will merge them at the end of the year whenever they do the filing. So QuickBooks Online has different tiers. So these are the tiers, and there's a link at the bottom that you can click on. So you can, all of these lines, they're links. So you can click on them and you can find out more what this means. So for example, something as, something as like bill management has a lot of different features within bill management. It's just a general terminology. So I actually would recommend going and clicking at different things and finding out what it can do for you on a more granular scale. When you're selecting a tier, you have to ask yourself, do I use cash or accrual accounting basis for my business? How many concurrent users do I need? And keeping in mind that accountant is not a concurrent user. Accountants, every one of these files has two spots for accountants that are not part of the number of users allotted. So for example, in Essentials, you have 3 users included, actually 3 users plus 2 accountants. Do I need to connect more than 3 sales channels like point of sales or e-commerce to my QuickBooks Online? Probably not. So with that in mind, even though they're calling Plus their most popular option, actually for starting out businesses who are just switching into QuickBooks, I would say Essentials, well, actually I wouldn't say, it is a more popular solution because typically you have 3 users, which is like the founder, the bookkeeper, and maybe a person who does order processing. You can, with user accesses, you can limit them in ways so that a single person, for example, can only have reporting capabilities or only entering bills or only entering invoices. So you could have 3 people. And so what I would say is you could start with this. You can upgrade and downgrade anytime you want with only one thing in mind. If you start using inventory, like if you're using the inventory feature within QuickBooks, that's it. Then you'll really have to consider what it would mean to upgrade or downgrade. For example, inventory only exists in Plus. So if you start with Plus and downgrade to Essential, you will lose all of your inventory tracking and your reports will go off kilter. So I would say that if inventory is in your, in your future, then it's not as easily. But you can go from Plus to Advanced, and sometimes from Advanced to Plus, again, depending on how detailed your inventory tracking is. But I would suggest starting with Essentials and ramping up as you need. So how do you set up your QuickBooks file? You actually start with a chart of accounts. So the components of chart of accounts, they kind of go back to the financial reports that you run. So balance sheet has assets, liabilities, and equity accounts, and profit and loss as income, cost of goods sold, and expenses. So a chart of account has all of them, and it just literally goes assets, liabilities, equities, income, costs, expenses. Like that's the order of things. It's just a one list. We will provide a sample chart of accounts specific to livestock and meat business. It's not just farming; it's also for meat business. As separately as a link. So an account that comes, QuickBooks does give you an account. It will be sort of fitted to what you need. And the reason why it does that is because there are a number of accounts that must exist in order for QuickBooks to work, in order for accounting to work, because there are some rules to accounting, like for example, assets equals liability plus equity. It's a two, like your debits must equal credits on a single transaction. So in order for this to work, QuickBooks insists that there's like 5 or 7 accounts that are like default to QuickBooks. Everything else can be customized, but these like 5 have to exist. So the best approach is figuring out what you want to do. Well, do you want to track inventory for starters? Because that's just going to determine some of those very specific questions. How you want to track your sales, how you want to track your expenses, like the level of detail. You can do it on a piece of paper with a pencil. Like you can just sketch things out essentially. And then afterwards, you take the QuickBooks chart of accounts and you start customizing it. You will rename some things, you make some accounts inactive, you add other accounts. So you'll start playing with what QuickBooks gave you. I want to impress upon everyone that this is a lengthy process. It takes a while. QuickBooks it's just this in itself usually takes about like 3 hours to set up, because you inevitably have more questions and it's not as simple as it looks. But it's very, very important. Now you can change it once you set it up. You can add things along the way, but you just at least have to have some general idea of what you want, on the grand scale, the high level. And one thing also to consider, you cannot delete an account in QuickBooks. You can only make it inactive, which is lovely, so that you don't accidentally lose a whole bunch of transactions. It'll just show up as, like, if you run a report with an inactive account, it'll show up with a name and it'll say deleted in parentheses. I don't know why they say deleted. They really mean inactive. So for multi-entity companies, again, we do recommend that you keep 2 separate everything. So bank accounts, credit cards, and QuickBooks files, and possibly payrolls if you have payrolls. If it's not possible, for whatever reason, there are some features in a single QuickBooks file that you can use to keep track of them separately. One is that you can create accounts for each side of business in the chart of accounts. So you will have assets for the meat business, assets for the ranch business, assets for, liabilities for both. There's some liabilities like accounts payables you can't split, but others you can create literally 2 for everything. Or you can use classes. So classes is like a tag. So you tag every transaction or every line on every transaction, either, to which entity you want it to go to. So if you're booking a purchase, you can say, oh, this is for a ranch. Oh, no, this is for the meat. Or you can split it into 2 lines, like the same purchase can do 50-50, for instance. And you can say, okay, well, this part is to ranch and this part is to meat. The best in class is to use the combination of the 2. You shouldn't have chart of accounts that is like Encyclopedia Britannica. It should just be like concise and to the point. But some things will need to be duplicated, especially everything that's on the balance sheet. So your assets will have to be separate because they're just separate types. And your income and cost of goods sold will be separate because, again, it's just how it flows. Everything else like operating costs or marketing or whatever other expenses you have, occupancy costs, you could have a single line item on a chart of accounts and then 2 different classes. So like you could have rent that could be either meat or ranch, for example. And then when you run your reports, you can say, show me this report on class level. So it will show you, like, it'll break it up by class. The next step, once you've set up your chart of accounts, you will connect your bank and credit cards to QuickBooks. There's no limits as to how many you can connect. What will happen is and QuickBooks will like guide you through the process. The transactions will show up in the banking section. It's kind of like a sandbox. This isn't hitting any of your accounts. They're just going to sit there. And what you do is you take them and you add additional information like the vendor name or client name or whatever, and then press add, and then this will get added to your QuickBooks file and show up on your financial records. Everything that's sitting in the banking is just like FYI, like it's information, but you will play with it and add it to your QuickBooks file so that it becomes part of your balance sheet or your P&L. You can create rules in QuickBooks to automate recording of transactions. QuickBooks remembers some things pretty well, but rules will make it like solid. So if you say everything that's coming in to this one credit card or to any credit cards, there's like limit, and has in the bank description word Amazon, I want to go into office supplies because I buy office supplies from Amazon always, or Staples, whatever. And then you tell QuickBooks auto add. Don't even ask me, just auto add. Like every time it comes into banking section, QuickBooks will just literally like add it for you. Or you can say, you know what, mark it as office supplies, but I want to take one last look and press the button myself. So you can do either or. But it's great because it just makes your processing just so much fun. So yeah, so the benefits, it significantly speeds up your data entry. The reason why you want it this way is so you don't forget to enter some transactions, and then it simplifies your end of month reconciliation and review. So these are the typical entry screens. This is an expense, and then this is an invoice. So a lot of things are similar, but these two are the least similar ones. But expenses, they look like the checks and bills and expenses look almost identical. Like they'll have the same parts. So it's pretty familiar. Pretty familiar any way you look at it. So for example, it'll have a payee, which account you want to pay, you want it to pay from, the date, how you paid, and then categories, what they mean, like from chart of accounts, the accounts, description, amount, and then you can add a customer. I took it from a QuickBooks file that didn't have classes, but if you are tracking things by classes, you will also have a column here that will let you add a class to each line. Or if you want to track classes by expense, it'll just be up here somewhere. You can add more memos, and this is the wonderful place. You can attach things, as many as you want, as big as you want. Well, actually, no, sorry, 0.2 megabytes, but that's a pretty big file. So you just drop in the file, and now every time you open this expense, this file is going to be there. It's awesome for things where you have to do some computation in order to arrive at this entry. So we use that for inventory adjustment entries, for loan payments, things like that, like loan entries. You can attach your loan document with it, so you always have it. An invoice, this is what you would send to a customer. So don't worry about tags, it's just QuickBooks. But you can add a customer, the dates, the number can be auto added, or you can do a custom number. And then you put in your products and services. So it's pretty, I find it pretty easy. One thing that I actually didn't mention, QuickBooks allows you to let your clients pay you directly because it has a payment processing feature in it. So if you have wholesale clients, you can set up the different ways of paying: PayPal, Venmo, Amex, Visa, MasterCard, Apple Pay, or they can pay by ACH. ACH tends to cost, I think, $10 per transaction. And then all the other ones have like a credit card processing fee, which is about 3%. So we talk about how do you record income. So like you've set up your chart of accounts, you've set up your connectivity. Now you're starting to record, you start recording income coming. So there are 3 different kinds of income that you can get, right? So there's wholesale, and this is what you get by phone, email, or in person. You enter it yourself directly into QuickBooks, and you typically either create an invoice or a deposit once the money hits your bank. It's pretty manual, yeah. So manual entry is like the way to do it. But you can use a feature called recurring transactions to create invoice templates, if that helps, so that you remember everything that you need to enter on an invoice. So recurring transactions is basically templates for data entry. Another way that the income comes from point of sale. So it will come from Square or Shopify POS or Revel POS. And this sales data comes from a report you can connect. So if you're entering it manually, you run a report in that system, in the POS system, and then you enter a sales receipt or a journal entry. And again, you can use recurring transactions to create a template, so you're not creating it from scratch, so you're just like filling out what already exists. It's very flexible, but it requires that you set up that recurring transaction correctly and that you understand the reports from the POS and how that affects your books. You could sync it up. You can sync Square to QuickBooks. That will take care of all of the data entry. Again, you have to understand what you're doing, like what account connects to what account, but it'll definitely take all of the manual entry, out of, like, you won't need to do that. The only, and it comes as a sales receipt. So the only drawback to that is that every transaction in Square will sync to QuickBooks or from Shopify POS, every transaction. So as any sync, the more sync points you have, the more likely that something may get lost or fail. So we tend to say it may be better to just do a monthly entry when a journal entry, but it's kind of like your comfort with it. And you will decide upon that based on how many transactions you have per month or per day. The good thing is that things don't fail that often. So I'm saying that only insofar as I personally don't like to have duplicate records, because you already have Square. Why do you also need to create it in QuickBooks? But some people like to do that, and I would say that it doesn't fail that often. Or you can do a plugin sync. And what a plugin actually, remember I was telling you, so Square POS QuickBooks is a native integration. It's a point-to-point. You can do a plugin in between, and what a plugin would do, it would summarize the data for you. So a plugin will create a journal entry or a sales receipt every week. Let's say you don't want to know how much you got in a day. You want to know it on a weekly basis or a monthly basis. A plugin would be able, you can customize a plugin to process the data for you. The pros is, that it's just, you've set it up and now it's just working on its own. The con, the bigger one, is the second that you put something in between QuickBooks and let's say Square, if that connectivity fails, you may have to talk to QuickBooks, the plugin people, and Square, and they will all point fingers at each other, and customer service is going to be very difficult to get. So that's the trick about the plugins. It's, if they fail, you have to do some sleuthing on your own to figure out where it failed and who's failing you. You have to keep in mind that the main reason why connectivities fail is when one side changes its security protocol because of rising threat of e-commerce pirates. So as soon as one side changes something in their security, like the way that they do security, and the other one didn't catch on yet, that's it. That sync fails. And so that's what we see the most. Chase Bank, oddly enough, is the one that fails very frequently with QuickBooks, because Chase is just obsessed with the security. Great. It's just you constantly have to refresh your connectivity with it. So better or worse, And then the third type of channel that you have is e-commerce. So it could be Shopify, it could be on BigCommerce or Squarespace. And it typically works just like a point of sale. If you're doing it manually, you'll run a report in Shopify and use that as a way to like make an entry. You could sync Shopify with QuickBooks. It'll work exactly the same way. Square, it'll create sales receipts for every sale transaction. Or you can do a plugin. So in this sense, like if it's a system that's outside of QuickBooks, then connectivity and everything is kind of very similar. So if you do one, you can do another one easily. The only thing I would have to, and I didn't write it in here, but if you do have Square and Shopify, you have to keep in mind that they're using products as a baseline to connect. So like, for example, it's a SKU-based connectivity. So like If you have a SKU in Shopify, it'll look for a SKU in QuickBooks to like bring the data over. You can't use, you have to either keep completely different SKUs into different systems, or you have to use the same SKUs if you wanted to like come in on the same sale. But what will happen if you're using the same SKU or the same product, a product can only have one income line associated with it. So if you have a sale coming in from e-commerce and from Square, and they're all hitting the same product, you won't be able to split that on your income statement. It'll just be like one line item, digital sales or something. So it behooves to actually have different SKUs in Square and different products in Square and different products in Shopify. And this may sound like over your head right now. I just want it to be somewhere in your head. Once you start connectivity, it'll make sense once you're like start connecting things. Because every system like has its rules and guidelines, and so it'll make sense once you start doing it. So this is the difference. So this is what a sales receipt looks like. It requires a product or service to be set up in QuickBooks. A journal entry, you can actually enter something directly into an account. So sales receipt, in a sense, is just an added level of complexity, because there's a product and the product is linked to one account. So if you're selling something, so product, it's like, let's say like pork ribs, for instance, or pork in general. So you have this product called pork, and then you're selling it, and the pork has an income account. Pork product has an income account associated with it. It's like pork income or sales, pork sales. So what this does is, if you're entering the sale in the sales receipt, you have to select the product named pork. If you're using this, if you're entering sales on a journal entry, you'll just do it directly to pork income. The beauty of using sales receipts and products is that you can run an additional level of reporting. You'll run a report that says, tell me how many pork products I sold by units. You can't do that on an account. In an account, you can just say, how much pork did I sell in dollars? And that's it. But if you're using products and services, you can actually like say, oh, okay, well, how many units of this I sold? The dollar amount is going to be the same at the end, but you can now have quantity sale. So that helps with like analyzing of what you've sold. So we wanted to specifically talk about cash transactions in QuickBooks. Cash is an asset. So it is the most commonly mismanaged asset. Right now, I'm sure the way you treat cash is just you deposit it in the bank, and then you say, oh, that's income. In QuickBooks, this is one thing where QuickBooks will literally say, no, you gotta treat your cash as as you would any bank account. So cash on hand is actually like a bank account in QuickBooks. So inflows and outflows you would record just the same way as you would record a bank in a bank account. The only difference is that you have to enter it yourself. A bank flows in from the bank, via the sink. Here you have to enter it manually. But the thing is, it's really, really important that you do, because this is where things get really muddy. So if you're having an inflow, create a sales receipt and say, I sold 5 units of whatever pork item it is I sold, and I got cash. And then when you deposit it, you say, okay, I'm transferring money from my cash to my bank account. That way, if you don't do it, things will get really, really messy very, very quickly. It's a very quick payment methods, because cash transactions happen very quickly, and very little record keeping happens in the moment. They just throw money at you, you grab it, you give them whatever, and that's it. So you have to compensate this quickness in some way. So one is you can do inventory counts to properly account for what the product moved. And so you can figure out, okay, I got this in credit card, the rest of it must have been in cash. You should also record your cash pretty regularly, and don't wait until the end of the month to do it. So for example, do it daily or do it weekly so that it's all fresh in your mind how that cash came in. And so ideally, any cash sale or cash purchase, you would treat the same way as you would a credit card transaction. It's just you have to be very regimented and very true to yourself at like entering it every week. So they're typical. So in terms of QuickBooks, they're typical. These are the typical transactions. The data entry. So the income, it's either you enter it manually, if it's like wholesale sale, for example, or it's synced over. COGS, it's the same. Either you enter it manually, or if you have an inventory system that does that whole processing, then it'll just get synced over from there. And then expenses, you enter manually. So when I say enter manually, though, if it's coming from your bank, it's synced over and then you customize it manually, so it's not like you enter it from scratch completely. So once you've done all your data entry, typically at the end of the month, by the mid of the following month, you want to do your reconciliations, and you reconcile basically just about everything on your balance sheet. Most typical bank accounts and cash and credit cards and loans. So what reconciliation is that you grab a statement from the bank or from the credit card company, for example, and the bank says, okay, as of, let's say, 31st of March, your closing balance was $5,000. And there's a window in QuickBooks. You go in and you're like, okay, so you're going to enter what your statement says, 5,000. So as I was saying, so I think I'll just very quickly go through this. So there's different types of data, typical transactions in QuickBooks. One is what you do on the data entry. So it's how you bring in all of your transactions. It could be income, cost of goods sold, or expenses. And when I say entered manually, it's typically synced over from your bank, but you have to customize it to like add information and then accept. Reconciliations is what you do at the end of the month. You grab your statements from your banks and your credit cards, and you make sure that all the information that in the statement is also in QuickBooks, and there's a process for it. And then you do your adjustments. For example, your inventory adjustments get entered, any write-offs that you have to do, or any transactions that didn't have a cash trail. So payments in kind, for example, barter exchanges, things like that. And this is something that the accountants help you with to set up. So there are a few really, really good habits in QuickBooks that you have to follow. Because QuickBooks is most useful if you use it regularly. So one thing is that never skip steps, never skip reconciliations, never skip steps. Second is be tidy. Always add vendor client names to checks, deposits, expenses, and bills. Because when we say garbage in, garbage out, in QuickBooks terms, garbage is a transaction that just has a date and an amount and and an account, but you don't know what that is. You can't find it later easily by name. You don't know if it's repeating, it's just there. So having a name is very, very important. Don't assume things. If you find something that's unexpected, maybe set it aside and ask your accountant later, because as you add more and more information into QuickBooks, there's going to be a lot of records, and finding that question may become difficult or you'll forget. So it's best to either put it into a special account called Ask My Accountant and ask them later, or just ask them at the end of the week, for example. Keep backups for any documents, not for QuickBooks, but just for any documents that you are using to enter. So save your records. Know what to trust. So as you're getting familiar with QuickBooks, start with just basic data entry and add more features as you're learning along the way. But QuickBooks has some pitfalls. So if you want to use a new feature, make sure that you really understand what this feature does, because it may not do what you think it does. And review your work. So you can run different reports at the end of the month or a period, like a week. Those reports will show you if you're entering things consistently. Like transactions by vendor report, for example, will show you all transactions by vendor. And so you look at a vendor and you say, oh, is my oh, I've entered everything to like rent except for this one. Oh, that was a mistake, obviously. I'm gonna change it to rent. General Ledger does the opposite. It shows you everybody that you booked to a single account. So you can say, oh, okay, well, this guy doesn't belong here, so you can reclass it to somewhere else. P&L and balance sheets help you see how your accounts fared month to month. So you can see if you're missing things, if there are holes, like for some bill that you didn't get from somebody in some months. So you run your P&L by month, and then you see, oh, okay, so I have a January, February, March. Oops, nothing in April. Where's my April? And then you can go and find that bill, for example. And so with all of that in mind, I'm going to transition to Hardy, who can talk to you about how he's using what the accounting system and reports from the accounting system pulls out.
Thank you, Miriam. Sorry for that technical snafu in there.
Yeah, no, I didn't know what that was, but okay.
Yeah, all good. So Hardy, and good, we're done screen sharing. Perfect. Tell us a little bit about the Tribes Herd and its history and just kind of general management style, and a little bit about you and where you come from, so we know who you are. And I'm gonna spotlight you for everybody.
Okay. Yeah. I'm Hardy Tozier. I've born and raised right here in Southwest Colorado. I've worked for the tribe for about 17 years now, and we whenever I came on, the herd of cattle was already established. I come from a ranching background, a farm and ranching background of in a local community right here. I actually pro rodeoed for a couple of years right out of high school, and then went to college and went to work on a couple of ranches down in Arizona, and then moved back here and went to work for the tribe. I've had a couple of family members that have worked for the tribe throughout the years here as well. I've got a cousin that previously held the position I have, but there was about a 10-year interval in between him and I. And my dad, he was a livestock manager for the other division of the Ute Mountain Tribe on their natural resource department, which consists of the individual tribal members kind of community herd of cattle. Like I said, the herd was established here at Farm and Ranch when I came on. We're typically a Black Angus and Gelbvieh cross herd, a balancer type herd. We run in the past 17 years that I've been here, we have ran anywhere from 850 cows downwards of 500 mother cows, and then just give and take on our yearlings from anywhere from 225 to 45, just depending on the drought and conditions. The last few years have been pretty tough. This year looks like it's gonna kind of pull itself out, and we're hoping for a good year here right now coming up. We've got a lot of moisture and retained quite a few yearling heifers to try to not necessarily build the herd back up in numbers, but just to try to improve the herd health and lower the overall age of the herd here within the next year or two by adding quite a few new younger females to it. So that's we don't ever purchase. The only purchased animals that the Farm and Ranch Enterprise has is just on our sire side, on the bull side, is the only purchased animals. So everything, all of the females on the ranch are all one branded home raised animals, which we take quite a bit of pride in that. We have marketed cattle multiple different ways throughout the years. A lot of it is is weather and kind of nature driven, depending on if we have enough feed to wean calves on. We'll wean them, grow them, usually pre-contract them, and either retain ownership of them through the feedlot, or just sell them at a higher base weight, like December, January delivery. The last couple of years, our hands have been tied with limited feed available due to very low irrigation water. So we've been marketing right off of the cow in like October for a fall delivery on the cattle. We just try to stay as versatile as we can, and try to do, make whatever management decisions need to be made for the year at hand. Basically, we just kind of have to go off of what is dictated by our resources available. So.
Sweet. Thanks for that. So let's take that and pull it into books. Can you tell us a little bit about how the books of the herd are managed? Sort of like, what do you keep track of on a daily basis, on a weekly basis, and then how does that flow up to the bookkeeper and then up to the accountant?
Yeah, we I keep track. I've got a little, like, it all starts with a pen and paper in a little basic red tally book to begin with. That's my daily kind of log there. In that log book, I keep track of death, loss, sickness, pasture rotations, who worked that day, what we did for the day, when a new pasture begins, whenever the number of head that goes in there, the number of head that goes out of there whenever they get moved. That's kind of step one, daily log right there. Step two would be kind of our seasonal jobs that go on. Right now we're in branding season, so we keep a handwritten daily, or a branding record, of all of our animals here are all ID'd with a letter representing the year that they're born, and then a ranch ID number. So their offspring, until they become retained females in the herd, they just carry the exact same identification number as their mother. So at branding time, those ear tag numbers are recorded. Then that is compiled with like our spring shipping record. We do that, and in July we put together all of our spring movement, because all of our cattle basically move off of our project there. They get categorized. Steer and heifer pairs go different pastures, and the numbers on those all get entered. So we have every semi load or trailer load, however they're transported, then they're logged in a spring shipping movement report. So we can have track of how many cows left the project, how many calves left the project, and how many bulls. That I skipped one there. We do a monthly Excel spreadsheeted inventory report as well. That inventory report is, and we don't always get it done every month, but we try to do it every 2 or 3 months. We try to get it kind of caught up. We use the assistance of our daily log, and then our spring and then also a fall shipping movement. If we do get behind a month or two on our monthly Excel spreadsheet log, that is then compared to every time we do our monthly, whether it is every month or every other month, then it is compared to our QuickBooks inventory in order to justify whether or not cattle are getting classified correctly. We've got cows, we've got bred heifers. Cows and bred heifers are together. We've got yearling heifers and bulls. Our baby calves are not entered into QuickBooks until they're being sold as a crop. But that's kind of how we try to kind of break it down. We try to do a lot of cross-referencing. Just one of our biggest challenges is to make sure that whenever cattle are sold or transported, that they're documented under the correct classification, whether it's a cow and bred heifer or whether it's a yearling heifer, or also then keeping track of bulls.
Great. That's awesome that there's like so much back and forth between paper and Excel and accounting software, because I think that that's pretty realistic. And then what about so that's like more on the production side of record keeping. What about invoices and income that comes in and expenses that go out that you may or may not be responsible for? How are you tracking that? Is that and coding it? And what's your exchange between your bookkeeper, and how's that sort of in and out of income and expenses happening in QuickBooks and for you in your experience on the daily?
Okay. Yeah. We've got our expenses kind of broke down in different categories. We've got our livestock expenses, and then it's broke down multiple different directions. I mean, we've got our like kind of individual people that work in the livestock department. So they're obviously their expenses as far as their wages and stuff come out of that. Then we've got it broke down to where then our like our custom work, which is we do a lot of trucking on our cattle here. We do some ourselves with some of our own equipment, but then we also hire out quite a little bit. And so we've got, it's a big enough of an expense where it has its own category, to where we can look up our custom work, which is our custom trucking. We've got professional services, which is probably our second biggest, which is our veterinarian services. We've got it broke down as far as what work the vet does versus then what, just purchase medicine that we get, whether it's, antibiotics for treatment or whether it's, just standard like branding vaccinations and stuff like that. So we can get that and compare those bills to our vet expenses, which is our professional expenses. We try to keep the farm and ranch enterprise has a lot of equipment, a lot of trailers, vehicles. So we try to keep track, though. Whenever I get like trailers worked on or anything like that, then I meet up with our in-house bookkeeper and initial invoices from different services.
So you're coding, like you're telling
so
her.
we're coding bills that are pertinent to the livestock department. So at the end of the year, we can judge our income versus our what we our expenses for the year.
Right. Great. So that's a perfect segue. So let's talk about financial reporting. How often are you looking at financial reports? How often are you looking at the P&L and at a balance sheet, and what are you looking for? And how do those reports help you make decisions for the herd?
Yeah, we, like I said, we compare our monthly to our QuickBooks, but we don't necessarily look at the, crunch the numbers and use that use that number monthly by any means to big decision making. That's more of an annual decision there. We'll try to take, and like our labor, for example, is one of those deals that's real volatile. Whenever last year our cattle numbers were somewhat down, but due to the extreme drought, we had to do more with the animals. We're constantly on the move with them. We were constantly moving them different pastures. We were chasing feed, we were chasing water just here and there. So then in turn we had more labor costs. So we tried to take that accounting software, and then at the end of the year, then we can try to look at that and then use that. That's also where the decision came about 4 years ago to purchase and run one semi and cow trailer ourselves. Was we looked at a lot of little short, just kind of moving cattle here and there, and we had a pretty good chunk of money tied up in some stuff right there that then we were like, hey, we could be doing this in-house, not doing absolutely all of our transportation in-house, but we could, a lot of this little, those guys have a base rate. When they leave their house, they charge X amount, whether they drive 20 miles or whether they drive basically up to 200 miles. Whenever they get over 200 miles and over, then they typically charge by the mile. So we decided then, we were like, we use that accounting software to be able to see that, hey, we're spending too much money here on trucking. Let's do something a little different. Not putting all of our eggs in one basket, as far as like, hey, let's haul all of our own cattle. If we have a truck breakdown, which always happens somewhere, then we'd have been totally dead in the water. The same way now, like our last year, looking at our labor costs versus the amount of animals we had, trying to decide, and we're trying to do different management decisions this year, trying to get started on work a little earlier. Since we have feed available, we're not in quite as much of a rush. So we was able to look at that extra expense last year in labor, and trying to use our bookkeeping method to try to, okay, let's get started on branding season a little bit earlier. Let's do fewer head at each time, so we can have less people there. I mean, things of that nature.
Yeah, that sounds, like a good example for something that you could be keeping track of, in Excel, for example. You could be keeping track of all of those different expenses here and there for those short moves.
Yeah.
But the advantage is that in one click, you have a report that compiles all of them, and they're easy to see and pluck out, and they're easy to add up to then make that decision to, go in-house. Whereas you could do that in Excel, sure, but as Miriam said, like, the ability to have human error go in there with all the ins and outs is pretty high. And then you don't have an easy headache-free analysis method, really. And then I'm just curious, like, you going back in, so you code expenses throughout the course of the week, let's say, and then you and your bookkeeper are looking at your monthly income reports to make sure that those expenses are they end up being coded in the right way, right? Is that how you all communicate?
Yes. Yeah, we try to make sure that they're coded in the correct way, as well as we have to keep very close track to make sure that our sales are coded in the correct classification also. So then all of our, I mean, there's a little bit of miscellaneous expenditures every month that just little things, air filters, whatnot, for vehicles that may get miscoded here or there, but for the most part, you know, like, and every season kind of has their peak as far as their individuality as far as what our big expense is going to be, and different years do also, you know, like last year, I was saying that like labor was kind of ate us up because of the drought and extreme movement of the cattle. Well, this year we've got wonderful grass, we've got ample amount of green grass, but now we're actually having to feed more mineral this spring than we did last spring due to the lush grass that we have. So that, you know, it's going to somewhat probably kind of balance out, because I'm kind of trading out what extra we spent in labor last spring to add in more mineral this spring. So, but we'll be able to see that, and that'll be coded for, you know, herd health management, basically feed and health management than labor. So.
Got it. That's another really good example of how, you know, using an accounting software really does change and help, you know, what you're doing.
Yeah, it'll reflect the quality of year, you know, time and time again. If you, you know, if you went back through and looked to see exactly where your expenditures was, I could pert near go through there and tell you, you know, high labor year, we were probably in a drought, you know, high cost in you know, supplementation, then, you know, that could have either been it depending on what the supplementation was, and we try to keep that broke down as individual as we can, or at least I can tell personally by who it was billed from, you know, basically what we were getting, whether it was protein or just mineral.
Right. And how did you learn all this, Hardy? Did you teach yourself this, or did you go to school? Who taught you these accounting kind of basics?
Well, I went to a few of my classes that I took at college was I did ranch management.
Okay.
You know, a lot of my actual like learning though is you know, practical experience and on-site experience. I've been, I mean, Ute Mountain Farm and Ranch, in my opinion, is the best place in the entire world to work. They've been amazing to me. They've been amazing to my family. Wonderful people to work for and work with. And our longtime secretary and stuff there, she's been there for years and has been extremely patient with me and helping me to learn, you know, different parts of this, and some of it we've probably kind of learned together, but yeah, it just, you know, I mean, you can go and learn all you possibly can at school and at college and taking classes, but until you get, you know, some real world experience, there's going to be, you know, different things come about that just experience itself is hard to replace of.
Yeah, that's kind of what I figured, and that's how I learned too. But I just wanted to reiterate it for everybody here that is a very common and possible way to learn this stuff that might feel overwhelming when you first open QuickBooks for the first time, but it's totally doable. Thank you, Hardy. I'm gonna turn it over. Oh, go ahead, Marianne.
I was just gonna add on. So like I work with farmers, and what I typically do is who haven't had a chance, for example, to do ranch management or something like in school, is we just take it slow. You know, we literally say, okay, what happened and how do we use that, like what happened, how do you want to record that in your books, and how do we want to bring it over so that it's like it feels very in the moment and practical, as opposed to me telling you, okay, this is how you do everything, and you're like, I don't know, which one do I use right now, which one is better. So yeah, so definitely.
Yeah.
Cool.
Okay.
Thank you. Well, I'm gonna turn it over to our our other folks here in the room. We have one question in the chat, and I encourage y'all to turn on your video if you feel like it and you feel like speaking. You can also just holler out and unmute yourself and not be shy. But our first question is from Jeff, and he asks, this is a question for Hardy. Does the cattle operation utilize any outside funding, grants, tribal inputs, government funding for equipment, facility upgrades, herd health management, payroll, etc.? Or is it just self-sustained on output profit?
Yeah, that's a great question. We work closely with the NRCS, the FSA office. We've gotten grants in the past through First Nations Development Institute. We've gotten grants through that have helped with upgrades around the ranch, as well as on-site training that we have hosted at the Farm and Ranch Enterprise. We've going through NRCS, some of our seeding on our, like trying to recover like some fallow ground on the farming project for cattle grazing. We've used some NRCS money on that, as well as like helping with some water developments or water upgrades, drinkers, wells, things of that nature. We try to capitalize on all of that we possibly can. So yeah, we do. We don't use any of that for like wages or anything along those lines.
Right.
But basically like ranch upgrades, improvements, and pasture and water development is what we try to limit that extra income to that we qualify for.
That's awesome. That's a good preview actually, and plug for a course that we're doing this summer on grants and grassroots fundraising. And I just got off the phone with the tribal liaison from NRCS explaining to me what he's going to talk about in terms of what's applicable and appropriate and really advantageous for tribal livestock producers inside of the NRCS programs. So that's Hardy just gave a perfect preview of what the NRCS guy said. Water infrastructure, fencing, interseeding and interplanting, erosion, some soil health stuff that are the programs that can help defer the costs, basic costs for any livestock operation. So that was a perfect little preview, Hardy. Thank you.
Okay. Yeah.
Does anyone else in our audience have any questions for Miriam or Hardy? You can unmute yourself and just talk, or drop them in the chat. We've got another few minutes here for your questions.
I was just gonna, while we was waiting to see if any more came in, I was gonna add one other thing, is how QuickBooks takes a load off of my shoulders. We have an on-site audit annually, and so they want to go out, they want to count cattle, they want to see that what we're producing to them. We'll go ahead and give them, we don't necessarily have to, but we'll go ahead and give them our Excel monthly inventory spreadsheet. But then they also obviously have our QuickBooks report as well. So that's been huge as far as being able to go out, get cattle are ranging out on pivots. So it's not like they're clear out in the tules and the brush and everything, but the accountants can get close enough on a head count to where it definitely satisfies them to prove that what we've got entered in our QuickBooks system is their inventory, basically value for value is there on site. So that
Cool.
has helped a lot there.
Nice. Thanks for mentioning that. That's exactly why you're here, to help us understand sort of how QuickBooks plays out on the day-to-day management.
Yeah.
Any other questions from anyone?
Good morning. I have a question.
Hi, Delphina.
Good morning. I have a QuickBook question. So I do QuickBooks, and I get it synced from my bank and they upload it. I'm a bookkeeper by trade, so that's why I'm attending this session. And I really enjoy the last one too, so you guys have very good information. But my question was, so when I do sync it up, what's your recommendation to go through the banking and categorize, or should I go through the expenses and categorize?
Well, once you sync up, it just goes to banking, right? And it shows up there. It won't. I personally prefer through banking, to be honest. I like that I can go through that window and I can categorize everything that I know, and then whatever is left, I can pull from there directly into an Excel spreadsheet and send it to the owner of the business and say, hey, what are these things? So I like that from just the information flow perspective.
Okay.
But-
I've been doing that. I feel like I double the efforts because I do sync and categorize on the banking, like when I click the banking part and it's all automatically synced. But then I have to sometimes I want to back in and go back to the expenses, because one of my clients, they're partners, so they each have their own debit cards. So I need to basically tell the difference of which one's swiping which, which card holder is it. So that was where I realized when I was doing that process that it loses in the banking syncing area until I go into the expense. Then I can choose those drop down menus of which card holder is swiping the card. Does that make sense?
Yeah, it makes sense. On the banking, I think there is not all. I mean, it sounds like your bank, that information does get downloaded.
Yeah.
You can customize the view in the banking window, and you can add more columns to see whose card it is. Not all banks give you that information, but I think Amex does, and like maybe some others do. I think Chase did that too. So you just there's like a drop down, and it's you can add more information, and you can filter it right there in the banking window.
Okay, I'll take a look at it once I get
Yeah,
off with
see if
your
that
workshop
helps.
today. Oh, thank you. That was very helpful.
No problem.
Awesome.
So
Any
as
other
I just
questions?
I wanted to because I know the next question would be like, all right, this is all fun and games, and then like, how do we get that? How do we get started, like from that perspective? And I literally just went through this whole process with someone, and I can tell you how it worked for this one farmer that they have farming and meat business, and they're using QuickBooks just for the meat business with us. But the way that it worked is I gave basically a preview of accounting. I gave accounting 101 to this person, and I was like, this is what it is. And we had one hour phone call where I just like talked about debits, credits, COGS and whatever. If you've attended a seminar with IAC previous to this, that's basically what we did. And then afterwards we did this 1 hour preview of QuickBooks where we just went around and clicked on things, and I explained like where different things are. You can set up a trial version with QuickBooks so that you have 30 days for free. So I can't show anyone else clients, and I don't have a Sandbox account myself. Oddly enough, they don't give it to us, but you can use one for 30 days. And we just like went around and looked at things, and I showed how things flow into one another. And it doesn't have to be me, it could be your accountant. But the point is that you can get somebody or a bookkeeper. And then you like go through this. Then we use the chart of accounts that we will be providing alongside this seminar. And we walked through it, talking about, okay, this is where you record these kinds of expenses. This is where you record those kinds of expenses. We talked about the business and how it applies, basically how we translate everything. And I typically do it like, all right, let's talk about how do you invoice? Let's talk about how do you keep track of inventory? So there's like basically questions that you like go through. And we crossed out a whole bunch of different things that she wasn't using, like she doesn't run her own payroll. So we just like took the payroll off. And there was no something else. And it was much simpler than the chart of account was. Or in some places we had to add accounts. And we did that together. That's another. And then afterwards, what in the last call we did was she connected her bank account and wanted me to like essentially hold her hand a little bit on like accepting the first transaction. So we did a few examples like together on Zoom. And then afterwards, she just went off and did her thing. And we had a more complicated thing because she didn't want to keep track inventory in QuickBooks. She kept it on a spreadsheet. So we had a spreadsheet that she was maintaining, like we worked on it together. And so she was using her unit costs from there. I showed her how to download information and quantities from like, so we did some stuff in Excel, like that's normal because inventory is such a beast. And then at the end, and throughout the process, throughout the year, she was calling me with questions. And she was like, oh, I was trying to do this. I was trying to do that. What does this mean? What does that mean? And I was just available, for this Q&A. And at the very end of the year, we had another concerted call where I showed her how to do reconciliations because she actually just felt like doing it at the end of the year, very small business. And then I reviewed her books, something an accountant would do. It's just she wanted me to do it for some reason. And then we talked a few more exceptions and questions and whatnot. And then we closed her books and she just sent it over to the accountant and was like, here you go. So that's like a typical process for us. In our case, it's spread over months and months because that's how she was doing it. It was a smaller part of her very larger business. And so she was doing it as her like time permitted. If meat business, for example, or whatever business we're doing is your main point of interest, then all of this can be condensed into, I want to say 2 weeks. The only thing is that like, if you're having an accounting call, having it longer than 1 hour is just becomes super daunting. Like it's just very hard to process that much of information that is so number specific and system specific. So I would say it's just like a series of 1 hour meets with your accountant, with your bookkeeper, with someone like me, or someone else, just to give yourself time in between to digest, to process, and to analyze, and really try to do things yourself, like plugging and playing and clicking and trying to understand where things are. Because as Hardy mentioned, a lot of it, hands-on experience, is impossible to replace with books and presentations. I see we have a question from Craig.
Yeah, go ahead, Craig.
Morning, guys.
Hi.
One of the questions I had was using QuickBooks. Does it have any struggles with tax implications on reservations? Some producers they aren't required to pay their taxes on cattle, on livestock, on reservations. So like if they was just using it just to keep records and just to see what their cash flows, but is that going to have a implication when it comes to tax time on what can be reported and what doesn't get reported? Because I know even like on your FSA or stuff like that, some reservations you don't need to claim your drought payments or
Right.
stuff like that. There's some.
So this is an excellent question, Craig.
You don't need to claim your calf checks.
Right. So this varies.
Utilize it to keep track of your expenses personally, or to keep track of your herd health personally. So
I have two-part answer. One I'm gonna ask Miriam to answer, but this is another perfect segue into what you might imagine is another IAC webinar, which is what is a farmer in the eyes of the IRS and what is federally exempt on tribal land and not for agricultural producers. And that is going to happen next month. I just got confirmation of the date today. It's not yet up on the IAC website, but it's coming, and we have some pretty kick-ass tax experts both
Like-
in ag tax and tribal ag
Yeah.
tax world. But short answer, which I hope Miriam also agrees with me, is keep track in QuickBooks and then work with your tax accountant to change what your tax submission is.
Mhm.
Don't try to keep like your own separate books and then keep a second set for tax purposes. You'll just fall
Yeah.
apart and die.
Yeah,
So, yeah,
I know like some reservations they have, and then like, you know, personally myself, I was able to not, I put my FSA payments, everything through there, through my tax professional, but then he was able to write supporting letters, you know, on my FSA payments or my CAF checks, writing supporting letters saying that it was on federal, it was on
federal
tribal
land,
land,
right?
along with my enrollment number, my tribal
Right.
ID. You know, he supported all those documents to exempt me from
Right.
those 1099s in different areas.
And it's
So
and it's
that's-
reservation based and treaty based. So it's not that webinar is
overall.
not going to be like, hey, here's the answer. It's going to be like, here's how you do the research. But I think you're cool staying in QuickBooks as long as you and your accountant before tax time are in deep touch about not just handing the IRS your
Yeah.
QuickBooks general ledger, right, Miriam? That's
Yeah, you don't
yeah.
typically. So the thing is that that's why I was saying it's really important to put names and information on some of the larger transactions. Like, for example, anything above $1,000 should have a note in the memo section, so you know what that is. Because you can run a general ledger report, which is basically the entire list of all the transactions that happened in a given year, and give it to your accountants. And they're very, very used to working with these reports. And then they can use that in Excel to compile a supporting letter, you know, for whatever you're submitting to the government. And it's much easier to move things around in Excel than having to, like, you know, do it
So,
off of like a, you know, by hand. So
So-
I would say keep a logical track in QuickBooks. Don't worry about it being GAAP compliant. GAAP is the generally accepted accounting principles. Do it something that makes sense to you, that you can explain to your tax accountant, and then they'll do the heavy lifting.
so using QuickBooks, that doesn't automatically generate it towards the government, right? I guess
No,
that's a big
it's
question too, like,
not
yeah,
at all.
some producers are like, well, if we use
No.
QuickBooks, does it automatically report that, you know? And that
In
gets
one
a
place
worry.
it does. In one place it does, that you have to be mindful. If you're using QuickBooks payments to receive money, and you're using credit cards to, like, you allow people pay you by credit cards, the QuickBooks will send you a 1099-K, and then we'll send one to the government as well. So if you want to stay off the federal radar as much as you can, don't accept payments through QuickBooks. Have people pay you by check or wire transfers directly into your bank. Yeah, that's really the only time where QuickBooks will report anything on you. I mean, they'll tell you they're going to do it, but this is one thing I can think of more readily.
Okay. Yep, thank you. And I just like to point out, Hardy, great point on you know, a lot of your experience in ranching, and also record keeping comes from on the ground experience of what it is and what you're gonna do and where at and how, you know, because I mean, like you said, you go to school all we want, but until you have that actual experience in that ag, I mean, it's that's the helpful tool in it. So it's
Yeah.
a great point. I
Yeah.
don't hear that point made a lot anymore.
Okay.
So that was a great point. Thank you.
Yeah, thank you.
Jeff, it looks like Jeff has a question. This will be our last one, then we'll let our speakers get on with their day.
I can hang around.
Yeah, I just had a quick question for Hardy. The land that you're running the cattle operation on, is that all tribal owned trust land, or is some of that leased, or is it like allotted trust land? I don't know how it works exactly in Colorado, so.
Yeah, we're on a little bit of everything. We're on tribal land. We're on some trust land. We're on national forest permits that the Ute Mountain Tribe has. And then we've also got we've got some private leases from private landowners that border some of the trust land up like in Gunnison County, up north of where we're at right here. We've got some private leases that just adjoins us there, so it was very convenient to pick up. And then we've also got we've got some BLM permits in Utah, as well as some national forest permits in the state of Utah also. We've got one piece of ground that is managed by Colorado Parks and Wildlife also, that is a state park that they allow grazing on, and so we've got the grazing lease on that piece of ground as well.
All right. Well, thanks y'all for sticking with us, participants. And thank you so much to Miriam and Hardy. Super accessible, dare I say, making it fun information today. So we really appreciate the time and the effort and the vibe. And I look forward to folks being able to watch this one and be surprised at how accessible you guys make it look and feel. So thanks everybody. You guys will get a follow-up email as well, like I said, and our next webinar is Understanding Debt, and that's April 26th. So hope to see y'all there, and I think we're good to go. Thanks everyone.
Thank you all.
Thank you.
Have a lovely week.